Dear students, welcome to Shasha's virtual classroom. So, today's class will discuss a comprehensive discussion on cash transactions. The lesson number one, that is chapter one, cash transactions. So, this is a comprehensive lesson, comprehensive class. So, where we will discuss all these concepts. So, what are those concepts? Cash transactions significance. Why cash transactions has been included at the first chapter by prominent authors like David Hopkins and Harold Wingle. And business entity point of view, we'll discuss what is business entity point of view. So double entry bookkeeping, what is bookkeeping, what is double entry, ledger accounts, what is ledger accounts, significance of date, name, dollar, and ledgers, what are the various ledger accounts, ledger books and all. So the rules, the golden rule, completing the entry. So what do you mean by completing the entry? Okay. So cash transactions. So David Hopkins, and Harold, and so I need to mention these names because these are they are very prominent authors, are very great authors. The way they have written the book on accounting is very important. So they have written the style, the logistical sequence of the lessons that they have written is very important. Okay, so it is easy for you, is easy for the students who are self learning, distance learning, and even for classroom learning also. Okay, so even for classroom learning also, the logistical sequence is very important. So we need to follow the logistical sequence. They have written in a beautiful way with some intention in their mind. So it is not just without any purpose they have written. So first they have written the first chapter, that is chapter one, cash transactions. See, what do you mean by cash transactions? So when you business, okay, so any business receives or pays, receives cash or pays cash. So here, cash transaction doesn't necessarily mean only cash, that is the liquid cash which you use in your pocket. So this can even be often read as bank also. So cash and bank is one and the same. Cash and bank is one and the same in the sense. When we are here talking about cash transactions, it means we are talking even about bank transactions, because bank, the cash at bank is another form of cash which is there not in your hands but it is in the form of, which can easily be transferred in the form of checks. So that is why this is mentioned. So receives cash and pays cash. So when a business receives cash or pays cash, it will be it will involve some other person who is receiving. So there are two things. One person is paying and the other person is receiving. So when the business is receiving cash, obviously the other person may be paying, right? So similarly, when a business is paying cash, similarly the other person is receiving. So this is known as double aspect concept, double entry. or dual aspect concept. It is also known as dual aspect concept. So if you understand this dual aspect concept in the sense of cash transactions, it becomes easy for you to move further ahead, so that the understanding becomes clear. Understanding becomes clear, so that you don't commit any mistake in understanding the very basic fundamental of accounting concepts. Okay, so that is the main reason. So first thing, we have to understand one thing, that is business entity concept. Okay, so there is something known as business entity, business point of view. Okay, business point of view. What is business point of view? What is business point of view? Like, let us say Mr. David starts a business. Okay, starts a business. So he will be doing several transactions. So he starts a business. So he invests money, and he purchases goods. So what all he will be doing during the course of business? So he will start business. He will purchase goods. He will sell. So he will pay salaries. So many other transactions he does. So when you are recording any business transaction, so when accountant of Mr. David, let us say accountant of Mr. David starts any business, starts writing the accounts. So he has to consider, he has to record all the transactions from business point of view. So what is business point of view? So for example, David purchases goods. Purchases goods. Okay, David purchases goods from Hopkins. Let us say Hopkins. So now, if you see from Hopkins' point of view, Hopkins is selling the goods, right? Hopkins is selling. So if David purchases, Hopkins sells. So from whose point of view you have to see? You have to see only from David's point of view. You should not see from Hopkins' point of view. So what it is purchases for David. So it is purchases for David. So that is what is David's point of view. So business point of view of David. So we have to record as if David is purchasing. We should not even think about what Hopkins is doing. Hopkins is selling, but we should not think about that. We should think only about David is purchasing the goods. So similarly, so of course, now let us say David sells to Mark. Let us say David sells to Mark. Now you may start thinking that Mark is purchasing. So Mark is purchasing. No, no, you should not think with like this. You have to always think from David point of view. So you have to think, you have to say David sells. David is selling. You should not think from the point of view of Mark. You should not think from the point of view of Hopkins. You have to think only from the point of view of David. David purchases, David sells. So this is what you have to think, and this is what is business point of view. The concepts gets clear as you move further ahead. So when you move further ahead, so when you do more and more practical problems, the understanding will be clear. So though these are initial classes, you might have understood this in the lower classes as well. If you have understood, it's well and good. So for those students who are not understood, please understand this concept. Is this concept is very very important. So now, so business point of view is done. So then coming to ledger. So what is ledger? Ledger is nothing but a summary of all transactions. So what is the summary of all transactions? Let us say cash ledger. Okay. So let us say cash ledger. So when we say cash ledger, it means we will record all the amounts received and paid at one place. Okay. So at one place. So this place at one place or account. Okay. Or account. So this account is known as ledger account. Ledger account. Cash ledger means all the amounts means any ledger. Ledger means summary of all the transactions. It is summary of all the transactions. Summary of all related transactions. So in this case, all transactions related to cash are recorded in cash ledger. So that is what is cash ledger. Similarly, there may be so many other ledgers like sales ledger may be there. Sales ledger means a place where we record all the sales. So similarly, purchase ledger will be there, salaries ledger will be there. So similar to that, lot of other different ledgers will be there. So where we got all the summary of all the transactions related to that particular account. It is particular account. It's very important. Okay, particular account. That particular account will be particular account. You cannot write whatever you want. So it only that particular account you have to write. So what else is there? So ledger is over ledgers, ledger accounts, ledger books. So summary of all the so ledger account is we have written a list of all the different ledgers where all the transactions related to that particular ledger we would have written. So then Business entity point of view was more double entry bookkeeping. So ledger account. So whenever we are writing the ledger account, we have to specifically write the date and name of the ledger and everything. So that is what is the thing. Now rules and completing the entry. So the rules, okay. So in this case, let us say in the case of cash transactions, what are the different cash transactions that can take place? You may deal with people. You may deal with people, companies, firms, firms. So when you deal with people, companies, firms, so the other person you will either receive or give. So the other person will be either receive is the receiver or giver. So either you will receive or give, and the other person will also be either receiver or giver. So let us say now David sells goods for cash. So now when David sells goods for cash, what is happening? Cash is coming in. Cash is coming into the business, right? Or cash is being received. Cash is being received. So when cash is being received, you have to write on the debit side. So what is debit side? See ledgers, okay. So ledgers, this is the format of the ledger. This is the format of the ledger. Ledgers are written like this. So, so the date will be here and dollar. Date will be here and dollar. So you have to write like this. So this side is known as debit side. This side is known as credit side. So since it is cash transactions, so we'll start with cash ledger itself. So we'll start with cash ledger. So let us say cash ledger. So what happens? When you sell, you receive cash. When you sell, you receive cash. So when you sell, it's called sales. So you receive cash. So let us say you have sold it for $10,000. You have made sales worth $10,000. So you are receiving cash 10,000. So cash account is debited. So cash account is debited. So cash account is debited. See, cash account is debited. So when you write this, why it is debited? Because of sales. You have received money because of sales. So this is known as completing the entry. This is known as completing the entry. So similarly, when you purchase, at that time you pay. Let us say you have purchased for 20,000. So when you purchase, at that time cash will go out of your bank account. So cash account. So that is why you write here. So you have to write here. So when you have to complete the entry, you have to write why it is. So it is purchases. So this is known as completing the entry. When you write this, it's known as completing the entry. So credit means cash account, credit means it will come like this. So this is the very thing you have to understand. When you write journal entries at the time, when you say cash account debit means cash account, cash account debit means this side. Cash account, it will come on the left side. Cash account credit means it will come on the right side. So left side of the account is called debit side. So debit side. So right side of the account is called credit side. So this rule you have to remember. This rule you have to remember. When the cash is received, it should be debited. When cash is received, it should be debited. Cash account debited. Similarly, when cash is paid, when cash is paid, cash account is credited. So you have to remember this. This is very important. So if you write the other way around, it becomes wrong. So it is the wrong way of writing. So you should not do that. So this is what we are going to learn in this lesson. So cash transactions. So this is the brief, comprehensive explanation of the entire lesson. So we will discuss more questions. So we'll work out some practical exercise questions so that the concept is clear, so that you get a hold of this. This is very very important. Please remember, please understand the concepts. So here it is, the concept, this is just the beginning. So when we do more problems, practical exercise problems, the concept will be more clear. So remember the rules. So when cash is received, cash account is debited. When cash is paid, cash account is credited. Simple. Okay. So learn this particular aspect. So we'll catch up in the next class. Till then, have a good day.